Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Friday, January 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 3 at 486 3/4. March soybeans were down 11 1/4 at 1054 1/4, and March Chicago wheat was down 5 at 549. This morning we had weekly export sales. Corn was solid, 1.6 million. Upper end of the range was looking for 1.7. Soybeans also solid, just under 1.5 million. Upper end of the range was for 1.8. Wheat disappointing, 164,800. Low end of the range was 200. Meal sales, kind of the same story, 208,700. Low end was 100. And oil, 2,900. Low end of the range was for 10,000. Good morning, guys. We'll wrap up the week here. A little bit of news here yesterday afternoon pertaining to Argentina temporarily reducing their grain export taxes. We talked a little bit before the show. It's interesting that it kind of coincides with them also drawing down a little bit of their expectations for their crop as well. So just an interesting yin and yang there. Dustin, maybe give us a few thoughts here as we wrap up the week, and then we'll throw it around the room.
Yeah, obviously the initial reaction overnight from that was negative. But, we were only really kind of counting on 16 million metric tons of corn anyway at trendline yield. And, as we start to make that assumption about what those trendline yield losses might be with the weather they've had, and the impact might just be more the headline than anything. I mean, we'll have to see how the market continues to react here. First glimpse overnight trade, obviously quite negative, but I think the day session is going to tell a better picture. Maybe it goes lower, but I still think that it's kind of a small impact country at this point because of the weather they've had.
Yeah, very good. Justin, what are your thoughts?
Yeah, no, I agree. We've been on a big rally, so negative headlines. We talked about headline risk anyway, but negative headlines will have good setbacks. So open sharply lower, trade a lot of volume, and look at corn, for example. We barely took out yesterday's gains on huge volume overnight. So I think that's kind of encouraging. I think it doesn't really change my attitude. If anything, on corn, I think it's chipping away at that already tight global balance sheet. And Argentina, just if whatever tons you take off that puts more impetus on the safrinha crop in Brazil, in my opinion, for corn. So I think corn balance sheets just tight enough that you're gonna need a lot more positives to start flowing in corn's direction to make it a bear market from here. Not saying we can't have good setbacks. We're on a heck of a rally, and all the moving averages have turned up. Big open interest gains, big hedge fund longs, good business today. So I think there's gonna be just good buying on breaks for now. Beans is, I still think the potentially weakest link with South America fully coming online. But doesn't mean that it's going to start a big bear market either. I just think that that's probably the most vulnerable. Maybe beans and meal specifically. Oil is, that's the oil leg of that tripod, if you will, is obviously going to be headline risk with biofuel policy and what's going to happen there. So beans have a lot of unknowns, I think. And corn, corn just looks pretty strong to me. I know there's a lot of really negative people because of Trump, but we talked about that yesterday. I think that's TBD there.
Yeah, I thought it was a good sign yesterday. The incoming nominee for Ag Secretary, a lot of good headlines, right? Her willingness to work with the Treasury on 45Z, I thought was positive, right? She didn't shoot it down, and her separation from her previous endeavors into ag, in terms of ethanol, right? Talking about, piggybacking on Trump's national energy emergency and the potential for, the waivers for year-round sale of E15. I thought those were all positive headlines that, you know, she needed, because there was a lot of questions on what her overall ag opinion was, given her previous employer. So
yeah, no, I think it's gonna be interesting. I mean, especially if you're, you know, putting these tariffs on Canada, for example, and we do get a lot of energy from Canada, right? So if we're gonna be more self-sustaining, and we want to use that as negotiation, whatever his plan is there, you know, I think you want to boost biofuels. I mean, it helps farmers, it helps, you know, national security, you can get in all those things. But I think, you know, he's already attacking windmills and some of these other kind of projects that really just heavily subsidized and really benefit ag that much, really, and a lot of foreign companies. So again, it's going to be a lot of just kind of have to wait and see how these things all play out. But we do know, I mean, the things that we do know today is that, you know, corn globally is pretty tight, and we really have to rely on the Farina and U.S. next crop production. You know, I think we're still kind of going over the big USDA airport. Now we're sitting at a $1.5 billion carryout after a record crop. So it takes time to work through that. I don't think it's just, you know, rally for, you know, 7 days and we just start a big bear market just because.
Yeah. Do you so we've seen, you know, a pretty good continuous uptick in open interest too. I mean, corn, for instance, up another 31,000. You know, we're going to look at commitment of traders on Monday. It'll be pushed today due to the Monday's holiday. But I mean, you kind of think that we're continuously getting longer and longer here?
Looks like it. And,
yeah,
you know, I mean, they're going to start, meaning the funds, are going to start pushing into record long territory. So there's always, obviously, once you get to those kind of extremes, there's always risk of, oh, what if they get out? I mean, same on the downside, right? And you could have not been bearish for a long time on the way to the downside too. So when the fundamentals go in the direction of the funds, you gotta be careful, you know. And if another shoe is to drop, now they've kind of got everybody stuck short against them. So it can go both ways. And just rising open interest, I think, is good for us meaning the industry in general. You know, you kind of had a lackluster open interest dropping the last year and a half just because it wasn't exciting. So you get excitement in these markets, and like we talked yesterday, kind of money moving around, and it's going to create opportunity, risk and opportunity. But I think that's a net positive.
No, very good. Any other thoughts here, guys, on the grain side? I know we've touched a lot this week, and it's been a pretty busy week. But anything else before we keep moving? Okay. Awesome. Rye, fresh highs again in cattle, and hogs were mixed after a number of good sessions. So why don't you put a bow on cattle for us for the week?
Yeah, I think overall everybody's just going to wait and see what happens with the report today. I think that's really going to be the focus. I mean, it seems like there's still quite a bit of northern business to do on the cash side of the market, but we've seen steady to a dollar higher on the live side in the south so far. So just kind of feels like the cattle feeders out there are going to try to get everything they can for them, just because all the news is good. Packers are paying up. So there really just doesn't seem to be a reason to accept a much lower price here. So at this point, cash is still leading the charge. So we'll look to see how that kind of shapes up this week. Also, the on-feed report looking for 99.8 for on-feed placements during December at 101.8, and marketing's at 101.3. So we'll see what the reaction is to the data on that. But we are starting to get into that overbought territory just from some of the technicals. I mean, I know we're in uncharted territory on the upside here, but you know, it is a market you want to stay protected in case you get something bad or something comes out, or in case we do see a more negative response to any kind of tariff situation. I don't know if that's going to affect the live market too much, but the feeders are definitely going to be paying close attention. As far as the hogs go, yeah, it was just kind of a mixed close, a little bit firm in February. So we were seeing some strength in the product markets. So cutout was up $1.60, cash was up $1. So we're seeing cash start to firm up again here. So just kind of feels like once again, there's a little bit of support back in the market, but overall, I think you got a lot of concerns kind of going into the tail end of next week, just with the tariffs. So we'll be kind of following that right now. But overall, it just feels like the news is pretty good. We got cold storage out today, so we'll see if that's going to have any real impacts as well. Everybody's expecting a pretty tight supply here, just considering the price action right now. So we'll see what that data says as well.
Yeah, one more thing, Dan, just to add real quick.
Yes.
There are, you know, like our weather guys that we do look, their confidence is higher for some moisture getting to those worst areas of Argentina starting on the 27th. So, you know, that would probably be more I think, damaging to the markets if it really got into a good wet pattern, southern Brazil, the drier areas of Argentina over the weekend and the next week. So see if that verifies.
With that being said, Justin, I mean, I know we've been kind of a sluggish start in the northern part of Brazil in terms of harvest and stuff. I mean, what are they saying anything on that? Are they getting a little reprieve up north?
Yeah, just, they've just been behind, right? So that starts putting impetus on Safrinha getting in time and some of the, it's still early, right? So the next 2 weeks, I think, will be important for that progress.
Very good. Oh. All right. It's Friday. We're ready to put a bow on this week. And it's everybody's favorite time of the week. It's Brian's Fun Fact Friday. What do you got for us, Brian?
Thanks, Dan. Happy Friday, everybody. Yeah, let's go back to January 24th, 1848. I'll do my best prospector's voice. There's gold in these hills. Yep. Nice. Today marks the start of the California Gold Rush, where a worker discovered gold working along the American River at Sutter's Mill. This led to one of the largest migrations in American history, with over 300,000 people moving in California in search of gold. With all these people moving there, I mean, the population of California was probably 1,000. This created like boom towns for all these gold seekers, the largest being San Francisco. Went from like 1,000 people to 56,000 in about 5 years. Hence San Francisco, the 49ers. Actually, merchants made more money than these gold seekers. You might know this Bavarian tailor who wanted a piece of the gold rush pie, so to speak, Ryland. He sold his durable he sold his durable denims. You might know him as Levi Strauss.
Levi.
Wow.
Yeah, wearing a pair right now. Yeah. So the big winners of the gold rush were two brothers, John and Daniel Murphy. In 1848, they mined 1.5 million of gold. Within today's money, would be about 40 million they hit in 1 year. The irony of this gold rush that the first piece of gold was found on Sutter's Mill here. The Sutter himself never got any gold. He used the government to try to give him reparations that all these people were finding gold on his land. That never happened. He died a bitter and broke man in Pennsylvania.
Oh,
so
man.
Yeah, but then yeah, I know it's kind of sad there. But Ryland, if you do ever head west and hit gold, it's a tradition to order the Hangtown Fry. It's an omelet cooked in bacon fat and topped with oysters.
Wow. Oh,
yeah.
I don't know about those oysters.
Yeah, those gold winners.
They would have thought of that. Oh, God. Yeah, that's going to stick with you for the day.
Right? Yeah. You'll be burping up something there, Ryan. But I'll leave you off with the dad joke. What did the gold say to the miner?
What?
You dig me.
Put that on the Valentine's Day card.
Happy Friday, everybody.
So as we wrap, we're putting out an offer for anybody that wants to do Fun Fact Friday. Just reach out to us and let us know. Brian is at the bottom of the barrel here. Yeah. Very good, Brian. Always fun stuff, man. Thanks for that. Before we wrap, Jack will have a few more details in the outro, but again, running a real favorable deal on some pricing for AgYield services here till April 1st. I know we've referenced many times talking about crop insurance and just what this year looks like. Give us a call. We can go through your operation with you and give you some ideas there. So, again, appreciate everybody that tunes in on a daily basis. Go ahead, throw us a like and subscribe. It'll certainly help us out. And again, thanks to everybody that watches every day. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here, guys. It was a good show. I hope everybody has a great weekend, and we look forward to talking to you again next week.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at AgYield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.